General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's get the work done. So, here. Wednesday. $5-14-25. Let's go here. Forex Factory. I know we got news tomorrow. Okay. China new money came up. Some FOMC members speaking here soon in 30 minutes. Tomorrow we have PPI. Let's grab my screen grabber. I feel like I got two of those windows up. I do. Powell talks too. So all the good stuff is in the morning. PPI at 8:30. Then Powell at 8:40. There was literally no news today, so let's see. It's probably still. Then after this week, I'll start looking at what else could be like. Well, really after tomorrow, I'll start looking at the next Fed print. But I want to watch June because I think June is going to be tricky. I think things are peachy and cream with the agreement, but I'm not sure it's solid, and I think it's just negotiating. So I'm still at 91.7%, no change. But I think the China deal is not concrete yet. The pause is the reaction that we got. See, these earnings have not been the earnings that push the market around. Nothing major for the NASDAQ. Tomorrow, focus will be PPI and power speech. Also, watch out for Trump talks. Anything tariffs. Let's go to this dollar on a day. What do we got here? A dollar is an accumulation. The way this candle closed, okay, it's giving failure swing. It is. How could I annotate it? Needs a premium run. There's really no way to annotate it. But a small poke back into EQ could have me interested. So here. Tap EQ of the range. Return into EQ and either rejecting it or even running Tuesday's high for reaccumulation. Gets me interested in lower prices. Today, okay, so today is a small range day. We do have solid closes, but it's very choppy. We swept liquidity here. Then we swept, but we broke here. Buy side run, sell side run. Let me change the color of this price line to like a gray or something. Yeah. Okay. Boom. Swept buy side, swept sell side, bullish still in range, retrace, pump. And we're up here, not taking care of any kind of business. This was the turtle soup for the day. This is what happened when we broke this range. So let's go here. These candles aren't doing anything, but it's creating a very large range. Lots of manipulation going on here. I'm not doing anything. I think everybody's looking at daily levels of what we're reaching to. But okay, that's the line I deleted. I'll be looking at this. Weekly levels. We're in this weekly fair value gap. And I believe this is one of the time fib levels. Yeah, it is. So Tuesday is going to be a big day on the time fib. This is EQ. Let's make this gray. It's a little bit too white. That'll work. So we're rebalancing. We also have like an order block kind of lining up with this, which is just like very, very close. It looks like we could be like it can line up with the open price of the year. That's next week. Nope. We have reached the weekly fair value gap, which is the draw for the week. No, I had the draw much lower. So one thing to learn from this is week 3 tends to be a more massive candle, especially in politically tense situations. Weekly order block is open price. I had a feeling too. Still like this drawdown here. A little bit higher. We might as well take the high and die from here, or either retrace. H4. I still like this level. I think that was an old GAN box I had when I was measuring this and seeing one deviation of this. This is a massive weak candle though. Note this. This is actually the month candle. Yeah, because the weak candle's on the hour. This week has a flat bottom and it opens up here. Massive monthly candle. Mm. 2025 open price does line up with a weekly order block, weekly bearish order block. That's my draw for Thursday. This will be the alert. Create that. Let's go here. H1. What would be the trigger? This is buy side. This is retap fair value a few times. There's a flat bottom. Price came and tapped it a couple of times. Think getting interested after here. It'll be good for confirmation. TR low, so it's our dealing range low. And this will be my last alert. I prefer to have it overnight so I can hold longer, as long as I'm in profit and my stop is safe before PPI. That would be nice. 2025 open price is my target. Alert set. Update C as well as key levels for update CEQ as well as key level for NASDAQ 2025 open price as areas to get interested. Export this. All right, that's that on that. Y'all have a good day. Peace.